it's been a political hot potato
Yeah.
for so long.
The current proposal is...
No, I know.
The current proposal is we're going to take some more money and we're going to spend it.
I know. And I know you're hurting because of it. Welcome to a new season of The Lowdown. I'm here with my mate Adam, and we're going to do another episode. This week, we're doing sort of, what might be a controversial topic. I don't know. But Adam, why don't you introduce it?
Controversial? Well, I think you're spot on there, Craig. We're talking today about capital gains tax. Now, these are three words that have been around a long time in New Zealand's political history, haven't they? Dating way back to the 1980s. I mean, these three words, capital gains tax, if we're to be honest, they have toppled political election campaigns. They've split parties. They've almost turned politics into a blood sport, hasn't it? I mean, but to be fair, I mean, isn't it getting to a point where it's just bloody boring now? I mean, how many times do we have to go around these houses? Capital gains tax. Anyway, Labor have put it back on the table yet again after saying, at least twice I can recall previous Labor leaders saying, we will never introduce a capital gains tax during my leadership. Of course, the new leadership now, so they can I suppose they can do it again. But guess who they are targeting yet again? Their favourite punching bags, the property investors.
You love that, don't you?
I love it. So let's have a chat to see, is this just another opportunity to slam their favourite people that they love to hate, property investors, or is this actually a good idea?
So one thing, it seems to me this is a more serious attempt, that they've spotted something in the Kiwi psyche that means that they think they can get this across the line this time, that it's not political suicide, that prior parties have eventually determined that it just wouldn't be the right thing to do. I feel like that
you think that capital gains tax is like having a coming of age moment.
Yeah, exactly. I feel like, well, I mean, who knows? We'll soon find out.
Maybe.
But yeah, maybe. Yeah. I feel like I don't know whether I think that, but I think they think that, and that now's the time to get this across the line, right?
Well, I mean, no one's surprised, put it that way. Do you agree?
Yeah, for sure. Yeah.
No one's surprised. So I suppose that's one thing, isn't it?
I mean, in terms of what you just said before about property investors, I get it. They're going to feel, like they've had they were throwing stones at the glass house for so long, and they smashed it finally a few years back, and it just feels like another thing on top. So I can understand that perspective. But
I mean, I know. Look, a large portion of the listeners, here today will be thinking, damn right. Go for it. Crush those property investors, or poor me, property investors with all this money and all the rest of it. But I mean, my perspective is that over the last 5 years in particular, but I would say even 10 years, successive governments, particularly the last Labor government, really did work very hard to make it extremely difficult for property investors.
No doubt about it.
And they succeeded.
Yeah.
It has been extremely hard for property investors.
I agree with that. But I think there's a broader social discourse around, housing affordability, around where capital flows are going. That is
general inequality.
Yeah, inequality, and just the fact that we need more revenue, right? So there's a big debate. It's not just it's not just the government versus property investors, but it will certainly feel like that for property investors. I think.
I think it just seems to be that there's a large or a growing kind of momentum behind this whole conversation that it's unfair that these property investors have got all this money or got all this wealth, and they should share it around more.
So
they don't pay their fair share.
Why don't you explain what it is that's being proposed for people?
Yeah, okay. So I have to say I'm not a tax expert, but
there's limited information anyway.
Yeah, the research I've done, basically what they're saying is they will tax capital gains made only on investment property assets. Okay, now investment property assets, so it's not your family home, it's not your farm, it's not other assets, but it's a rental property or a beach house, like a batch, a second home, any residential property that you don't live in, and also commercial property. So pretty much everyone, the only reason to buy a commercial property is as an investor, so it's a business proposition, or if you are the owner-occupier, but it's still a business benefit you're getting out of it. So I would imagine all commercial properties will be captured by this. I mean, no one's living in them, So it's all residential properties that you don't live in as your primary home, and all commercial properties.
And so the bright line test goes away.
Yeah.
It now becomes a capital gains tax, and that kicks in. There needs to be some sort of valuation around 1st of June.
Yeah, what is it? July 1st of July 2027. Okay, so you have this notional value of the property as at the 1st of July 2027.
So how's that determined?
I don't know. But, I mean, for example, I know they do this in the UK, and there was a particular date at which it started, and you can retrospectively value a property based on...
sales data at the time.
Yeah. Based on the condition that it is in now, factoring in any capital improvements you've made. So you could say, well, here's the flat, here's the property now. It's got a new kitchen and a new bathroom in it, and it's redecorated or whatever, and here are the receipts to show that I spent $80,000 on that at this date.
So that they take that off.
They take that off, and then they can factor in just the market movements.
Do we know that that's how it's going to work here or not yet? Not enough information.
I don't know that they've determined that, but that would that's just logic, right?
I mean,
but they have said they will account for capital improvements made. Okay. So they just backdate the value today back to there according to their market index, I suppose,
right,
and allowing for the capital improvements that you've made along the way. Okay.
So if you don't give them a valuation, so it'll probably be something like there'll be, as you say, some sort of way of taking it back based on HPI, or something like that, some based formula that if you don't provide them valuation from the time, that they will go off their calculation.
I guess so, but they won't know. They won't have the data, of course, on your capital improvement. So it'll be in the owner's interests to document things well, to document it properly,
but also potentially get a valuation. I mean, this could be a boon for valuers come 1st of July 2027 potentially.
Yeah, I guess there might be a bunch of people who go out there and actually say, "Well, I'm going to get it valued as of today to avoid any uncertainty."
Uncertainty. Yeah.
True.
Yeah.
True. So that's the plan. Any gain that you make, any profit that you make. We typically don't call it profit, but I suppose people would see it as profit. It's a capital gain, and you pay tax on that capital gain only when you sell it. So it's not unrealized capital gains. It's only when you sell, that's a sensible thing. And you pay it at the rate of 28%, regardless of what your personal income tax rate is. It's 28%, and that's to align with the company tax rate, 28%.
So history would say that this won't really have much of an impact on property prices themselves. I mean, if we look at the UK, the US, I mean, they've got capital gains tax, and and at the end of the day, they still have booming property booms and busts, and increasing property prices at roughly similar rates to what I understand is what we've had over the last
I mean, technically or theoretically, you could argue that at the margins, adding a cost into or reducing the amount of profit that an investor makes upon sale, that's not going to encourage investment, is it? So you might say that it discourages investment to a certain degree, but 100% you're right. New Zealand is quite unusual in that we don't have a capital gains tax. Most developed economies do. And like you said, the list you just rattled off, they've got a history of expensive house prices and booms and busts, just like we do.
I wonder if the unintended consequence here, or intended consequence perhaps, and you never know how it's going to come out in the wash, but I wonder if part of the strategy that they're employing is actually to try and direct capital to more productive assets. So they're saying, we don't want to be a nation of people just hoarding property for our future, because look what that's done to housing affordability. It's been a problem, a housing crisis that we're in. So this would be one way of because it's really when investment classes are relatively different. If they're all the same, if they all have a capital gains tax, then you just go to where what the best, what you understand, where you think your capital is going to get the highest return. But when you say, okay, if I go and invest in shares or a business or something, because I'm not going to have to, if I was to sell it, I don't have to pay 28% capital gains tax.
Yeah.
More capital could flow towards other asset classes and less to property in theory, right? Like because the relativity is different.
Yeah. And I think, look, this is one argument I think against the way they're proposing the capital gains tax. Personally, my view is I don't care whether they bring a capital gains tax in or not. It's not for me to decide. I mean, the government will determine, do we need more revenue? I mean, who doesn't decide they need more revenue, right? Any government wants more revenue. But I think that if you're going to introduce a capital gains tax, have it be broad-based. Don't have it apply to one set of assets.
Well, there's
and not
be a lot
others.
more revenue if you do.
Yeah, that's right. If you want to raise money, then put it across all the assets. But also, it just introduces unintended consequences, like you mentioned before, externalities, just things you just can't predict what changes in behaviour it's gonna cause. But certainly, it will detract away from property as an investment class. It will increase the appeal of, well, the most obvious thing will be shares, bonds, crypto, maybe.
So that could be good for the economy, though. That really could. I mean, you get more people investing in productive assets that create jobs.
So it makes these things more expensive and reduces the return on them.
Yeah, but
is that also a good thing?
Well, more capital flowing in can create more. And it's just that investment creates more productivity, right? More GDP, right? So there's the reality is that could.
But if that's what happens, then surely prices will just nudge upwards a bit to reflect the imbalance in the tax treatment, to then make the return equivalent to what it should be, given that there's not that capital gains tax, and so that settles at a higher price, and so the return on them is lower. I mean. The point is we don't know.
I'm not as convinced as you as that how it works. I think capital flows do have real impacts. I mean, the economy is not money, right? The economy is goods and services. That's what the economy is.
Yeah.
And money is just the spreadsheet, right? That's just how we record how trade happens between people. That's it, right? So it's actually like a concept. If you think about it, it's not real.
Just a way of measuring activity.
Yeah, or again, how much someone else's productivity I can get for my productivity, right? So goods and services is the only tangible thing that the economy, has, and so more investment into business does have that effect of creating more goods and services over time. Like that's just the nature of capitalism, right? More capital flow produces more productivity and more goods and services. So. That could be. I mean, I'm just looking at this and trying to be, as rational and impartial as possible. But what I was going to say was, so I think that may be something that they're intending to do. On the other side of the coin, which is more to your point, I mean, capital gains to me is meaningless from an like what? So what? If you make $100 and you give $28 to the government. You've still got $72.
Yes, that's right.
So no one ever went broke making a profit, right?
No one ever went broke making a profit. No, 100%. I just don't see why it needs to be narrow. And I just think if you're going to apply a capital gains, apply it to all investment assets.
Well, again,
I mean, if I trade in I don't know, antique Porsches, and I buy one for $100,000 and sell it for $200,000. Why would I not pay a capital gains tax on that gain?
I understand. I mean, again, and I understand just the genuine sort of fairness argument, and to say, well, this seems unfair, and there's certainly like the tax deductibility thing is another example of that, where it's just crazy, right? It's just completely unfair, and really skewed this sort of idea that you were treating the business of property investment differently to the business of selling a dairy or selling a supermarket or something, right?
Or owning shares or buying businesses or.
So I understand the point in the argument. I would just say that I think some of the consequences are intended consequences, not unintended potentially, right? That they're trying to shift, or think about it. Hasn't been framed up that way. That's just a guess from my perspective. But
there's always a reason for why they design it in a certain way. I mean, I don't want to be disingenuous, but I just think that, or be cynical and say that sometimes the reason they give you is not the real reason.
What about progression? Like we think, let's just imagine capital gains tax across everything. Yeah. Because I think the fairness, I can tell, is an issue. As a property investor, I can understand that view.
Well, I just think that the government shouldn't be telling us what's a good thing to invest in and what's not.
I get it, yeah. But, the government's role is to some degree to be paternalistic and maternalistic about, the society and to do things that might shift things that are better for all, right? And so if we go back to capital gains,
the government's role surely is to fulfill the roles in society that the private market won't.
Yeah, exactly. And so if you're getting distortions that the private markets are creating societal problems, then they're looking for solutions to that, right? Which is exactly my point.
No, I just think that if it is getting out of control, then pretty soon it'll be undone.
I've got a point I want to make.
Okay. I don't care.
So if let's just say that going back to that point, just imagine it was across everything.
Yeah.
At the end of the day, if we look at the current system we've got a very regressive tax system because we've got a heavy taxation on people that have to spend 100% of their income through GST, right?
Yeah.
So this kind of sales tax where if you're eating hand to mouth and you spend 100% of your income, your effective tax rate is going to be higher than someone who earns and is able to save. And then if they're able to save and put that money into real estate, shares, whatever, and then get a tax-free capital gain that they can sell and earn money that way, there seems to be a regression in that is perhaps a little unfair as well. So this is in agreement with your point that if it was across the board, across everything, that would go some way to perhaps, but I think there should be some movement somewhere else. Like if because that would be a big deal going across all assets.
Yep.
If you had capital gains across everything.
Well, it would raise a lot of money.
It would raise a lot of money.
It would be an equal playing field.
And it would be more equal, but we should give back somewhere. So maybe GST goes to 15% or
it's already 15%.
I mean, sorry, it goes to down by 5%, so it goes to 10% or something like that, right? Or you go back to supporting the people.
100% I agree with you. But what the current proposal is.
No, I know.
The current proposal is we're going to take some more money, and we're going to spend it.
I know, and I know you're hurting because of it. I know, I could sense it. But I want to just have a more philosophical discussion about capital gains, right? Imagine as a whole, what is the best thing here, And it's been because I feel like it's been a political hot potato for so long. And the problem with the political cycle is that short-term nature of it, isn't it? It's so hard to make lasting change and do things for 10 years and 15 years down the track because they're all worried about getting in or out of government, And so
that's right.
And I feel like, taxation is a big one. I don't have the answers. I don't know. But when I just think about it rationally and look at it, I'm kind of in a way, I kind of think, and I know I'll get a lot of heat for this from people that don't agree. And that's fine because I might be totally wrong, but I can see an argument for that would be potentially a good place to live, like a place where.
So you're suggesting if we're going to raise a whole pile of money, let's say that the government
do it properly.
Let's say that we do implement a broad-based capital gains tax where you tax capital gains on all investment assets, right? And then you take this significant amount of money and you use it to redistribute wealth in a way that is not saying you've got to now spend this at the doctor, which is basically what they're saying. They just instead of that they say we'll give you some back by reducing capital gains, by reducing
income tax at the lowest rates, or
by redistributing reducing income tax, reducing GST, and that sort of thing. And so therefore giving the power back to the consumers, to the taxpayers, to determine the best way for them to use the money.
Rich people don't need, where they sell an asset and $28 going out of a $100 gain is not going to make any difference to a rich person. But getting that revenue and then redistributing that to people that are more in need makes sense.
Way better idea than saying you've got to use this to get 3 doctor's visits. What a load of nonsense.
Well, I don't think you have to use. I mean, money doesn't care where it comes from, right? No, the government just has a budget, and then they go.
But don't tell me what to spend my money on.
Yeah, I don't know if they. I think they want to do this whole. It's all political noise, isn't it? When you say this is where the money's going. I mean, at the end of the day, they have a budget. They can put whatever they want into the budget.
Money out.
Yeah, exactly. Yeah. And then they've got exactly. So the money doesn't care where it comes from. It's not like that dollar has to go to that thing.
Yeah, but this is just another grab by a government that's already big. The government spends $34 out of every $100 that is produced in GDP in the country. So out of the whole production of the country, the government spends $34 out of 100, 34%. Now that happens to be about average across the OECD, right? So it's not that it's unusual, but it's a lot. Yeah. And then in addition to that, the government spends another $6 or $7 by borrowing. So they're actually spending 41% of GDP. That's a big government. That's a big government.
Good point.
What they're saying now is, I just want to increase it to 41 or 42%. Well, we're heading towards 50, right? I'm more of a fan of slimming the government down and, yes, distribute the income fairly to make it, to balance it out.
More equitable.
And the haves give more to the have-nots. But let the people decide where to spend their money. I mean, time and time again, we've seen governments are not the most effective at managing money and especially investment and capital and this sort of thing, right? So that would be my personal preference would be, A, make the tax broad-based, all investment assets, and then B, don't tell us what we should do with that money that's been raised. Give it back to the people, perhaps in a more that helps to spread the income out more fairly, and leave us to be in charge with how we decide is the most effective way to spend the money.
I noticed that there's no estate property tax, right? Which, it seems to me that one of the obvious places to redistribute wealth from is from, dynastic wealth, or, over a certain value. Like, obviously, if you think about where the baby boomers sit, where there's this sort of, and I don't know, I've never done the analysis on it, but the sort of wisdom is that the baby boomers are sitting on all this property and all these assets, and that the younger generation, perhaps haven't had quite the same chance in terms of home ownership and things that they have. Well, wouldn't it make sense to have an estate tax that over a certain point, because obviously if it's a small estate, you don't want to overtax it, and you want to give the next generation the chance to use that money to help them. But over a certain point, that we need people to be productive, not to have so much they can do nothing. And therefore, wouldn't taxing estates be politically okay, because people are going to be dead? Are they really going to be that up in arms over an estate tax?
Well, it doesn't alter your behaviour after you die.
No,
quite clearly,
exactly.
But it does before you die.
Yeah, true.
I mean, look, to be honest with you, mate, I don't know. I don't really have a view on. I do have a view on that, actually. My view is, I don't think we need more tax.
I guess what I'm saying is, I'm talking more about trying to solve societal problems. Is that not? Do you not, like, just in a philosophical discussion, do you not sort of think that might be a good place where you, if that's the goal, if that's the aim, is to redistribute, that's a reasonable place to look for ways to do that in a better way?
It's a reasonable place to look. I don't have a view on it, really. I've got a view on capital gains tax. I don't have a view on that. But I do have a view that New Zealand is struggling at the moment. And yes, we have equity issues, but we also have stagnation issues. And I don't think you ignite growth by adding complexity and cost into a system.
True. How are they going to treat capital losses?
I don't know, but I'll have a guess. I have a guess.
I don't think, because I did have a little.
No
bit
one
of
ever thinks about this.
Yeah.
Right. People don't think, oh well, we're going to tax capital gains. Oh yeah, and what if we make capital losses? You can't have it
both ways.
You can't have it one way and not the other.
Yeah.
Right. So if I buy a property for $2 million or for $1 million, and then I sell it for $800,000, are people going to give me a refund for the tax that for the tax on that $200,000 loss? I suspect the way they will do it is they will ring fence that loss. They won't pay it out to me. They will just
take
allow
it from future gains.
Yes, they will allow me.
Well, that makes sense.
Yeah, yeah.
I mean, I think that's a fair way to treat it. I mean, and interestingly, we're watching people lose money right now.
Yeah,
That's happening. I mean, there's way more sales happening today that are losses than we've seen for the last.
And the ones who aren't selling, they've still lost it. They just haven't realised it. I think one other thing is that everyone assumes that you buy something for $1 million, you sell it for $2 million, you get taxed 28% on that $1 million of capital gain. There are situations, of course, where after the tax you end up with less purchasing power than you did before you bought the investment.
I guess so. Yeah.
If the investment increases in value at the rate of inflation.
Yeah, that's right.
And then you get taxed on the nominal gain.
Less money at the end of it.
You have an asset that is now, or amount of capital that has less purchasing power than at the start.
You made a bad investment, didn't you? I mean, that's fundamentally what it comes. Your hurdle rate becomes slightly higher. Yeah, that makes sense. I think so.
There is an argument to suggest that it should be indexed.
Before we wrap up, one more point that just occurred to me is that one unintended consequence of this, and I think this does happen in other countries. I know it certainly happens in Australia because I've been talking to my sister who's over there who is not selling her property because of the stamp duty. So they just won't move. They'll continue to renovate and extend, do all this stuff. They just will not sell it because the stamp duty just makes the frictional cost of selling too great.
So you end up with really inefficient use of capital and mobility of labour and houses that no longer really work for their occupants.
I'm not sure I'd frame it quite as extreme as all that, but I think for sure, like, there will be more people that decide just not to sell and just take the rent, right? Like investors go, okay, well, that's fine. I mean, why would I take a 28% hit? But I'm collecting all this rent. Rents are going up over time. It's just going to be a lifetime asset for me. And so you may find that there's a little less turnover in the market because of that.
Well, it's definitely adds friction.
For sure.
Yeah. I mean, some people will find a way of suggesting that's a good thing.
Well, it's loss aversion, right? Like even if it's rational to sell, people will look at it and go, okay, right, I want to do X. Oh, hang on a second. Well, I'm going to have a $150,000 bill if I sell that now, right? Or maybe not.
No.
So
it's definitely going to factor into the decision making, isn't it?
Yeah. So interesting to see how that would play out. And I don't know exactly what that would mean for the housing market, but it would do something.
Yeah. Yeah, for sure.
Mate, fascinating to chat to you. So you're going to run for office then?
No, absolutely not.
Adam, pleasure as always. That was Lowdown. Hope you enjoyed it. Please like and subscribe, and we're going to be back again to do another one on just as controversial topic next week. Looking forward to it.
Yeah, see you next time.